my hot take, like the maybe part that's like the most controversial, is the following statement. And I'm wondering specifically if you guys would agree with this statement, right? So, as I said earlier, the hot take is I think that every finance manager or every money manager is violating their fiduciary duty by allocating 0% to Bitcoin if they're allocating 0% to Bitcoin. So I'm wondering if you guys would agree to that statement. Hey, what's up, you guys? Welcome back to another episode of Zillennial Money. As always, I am your host, Andy, the Doge of Wall Street. So I am called, apparently. And why don't you guys introduce yourselves?
Hey, what's going on, guys? It's Dominic. Be sure to like, follow, and subscribe to our channels. And yeah,
Hey guys, it's Tristan. We've got a great show for you guys today, so looking forward to it.
Yes, as always, I will be acting as our MC for tonight, and we have yet another loaded docket. So why don't we not waste any more time and just jump right into it? So the first story I have for you all tonight is the FOMC meeting that just happened last Wednesday. So on January 31st, last Wednesday, the Fed decided to pause interest rates and hold it steady at 5.25 to 5.5% federal funds rate. And what's interesting about that, because that was sort of expected already, but what's interesting is that Fed Chair Jerome Powell has signaled that interest rates have peaked already. So it looks like he does not intend to raise interest rates anymore than what he has already done. Interest rates will probably stay at current levels unless something crazy happens with inflation. But what's also interesting is that Jay Powell hinted that there will be no rate cut in March. So this was kind of shocking news to the market, and that's what prompted the market to kind of go down a bit by the end of the day after he said that, because a lot of people were expecting a rate cut in March, but Jay Powell is signaling that he doesn't think that that's going to happen. However, what's also another interesting thing is Truflation. So for those of you who don't know what Truflation is, it's an independent inflation aggregator. So the government inflation news, CPI, is often very slow. So they get data from various different places, and it takes them months and months to put stuff together. And they might also like go back and revise things. And basically, Truflation tends to be a lot faster because, again, it's an independent group and they have connections with other companies. They have APIs. They get fed the data directly. And Truflation is telling us, as well as the as much as the latest data poll will tell us, that the actual inflation rate in the United States year over year, as of February 2nd, is when I pulled this data. It might be slightly different now, but is telling us that the Truflation rate is actually 1.35% year over year. So that's already below the Fed's inflation target of 2.0%. So if we go by Truflation, then it's starting to imply that maybe the Fed has already done enough, and they should start cutting soon, or else they risk going too far and holding too tight for too long, which will send us into a recession, aka a hard landing. But as the government reported rate is still at 3.4 as of the latest CPI report. So at least for the government data, it's not showing up in the government data yet in terms of the massive drop in inflation. So I'm kind of curious to hear what you guys think about it. Do you think the Fed has gone too far? Do you think they should cut in March? Or, what's kind of your thoughts around it?
actually, I'll go first. So I have like a few questions for you. So first question is, when is the next FOMC meeting in March, you said?
Yes. So the next FOMC meeting, I can look up the exact date for you. Give me 1 second. But yeah, I believe it's in March.
Okay, so it's in March, and Truflation is at 1.35%. I'm kind of conflicted because, yeah, I guess there's a possibility that they may pause again, just because I think Jay Powell's on the level of safety, considering what happened in the 70s and the 80s. I think we're all hoping that maybe perhaps the cuts will begin to happen. Because let's be honest here, we want to make money with stonks. I think that's the main thing. We want all of our stonks to do really well. But if memory serves me correct, I think there are still like some certain layoffs going on. Like, correct me if I'm wrong, PayPal recently had some layoffs too. And I don't know if it was a few other companies. So a lot's going on in the economy for sure. So since all of this is happening, maybe it is time to make rate cuts so money's, kind of cheaper to borrow. It's hard to say because we're not Jay Powell at the end of the day. But for me personally, I'm hoping for cuts. I think it's about time. We've been suffering. We've been this close to drowning for a while now. So let us get some more air. You know what I mean? Like, it's tough. So that's all I'll say that.
Tristan, what are your thoughts? I actually have a thought that I'm going to come back to, Dominic, you, of something that you said earlier, but let's let Tristan go first.
Okay. Yep. I'll jump in here. Yeah, with regards to whether or not they're going to raise, pause, or lower rates, I suspect they're going to just pause. I think it's a little early for them to cut the rates, and I was saying last week that maybe they'll cut the rates, but I'm been thinking about it more, and I think they're probably going to be keeping the rates paused. I don't see them raising them again, but we did have that slightly higher than they expected in the reported rate for the interest rate. So I feel like that could inspire Jay Powell to keep things paused. Whether or not Truflation suggesting it's at 1.35, maybe it's that low, but also, I don't think the government will base its decisions, like the Fed will base its decisions on the Truflation number. So until their inflation comes down from their own metrics, I don't think they're going to do anything more than pause. And I don't think they're going to raise again because it's not. I don't think the American economy will do well with that. So we'll see. We'll see what happens though.
Well, you said this is what you think that they are going to do, but what do you think they should do? That is,
what do I think they should do? It's difficult to say what they should do. In the sense of selfishly, I would prefer that they cut rates sooner so that the interest, so that money starts flowing again, and the stock market starts going more than it already has been. But at the same time, I could see an argument for them keeping the rates paused for a bit longer just to ensure that inflation's been stamped out. If only because of the way that they're the metrics. Like if I were Jay Powell, I know that I would be looking at their own metrics and questioning whether or not I should whether or not it was too early to cut rates. So at the same time as if they should, I think that maybe they might want to hold off a little bit longer before they give us the parabolic cutting the rates and things start compounding again.
Yeah, okay. Well, let me share some of my thoughts maybe. So by the way, Dominic, I looked it up. The next FOMC meeting is on March 20th. So we still have quite a bit to go. But yeah, going back to what you guys, both of you actually were touching upon earlier, that we kind of selfishly want the Fed to cut rates so that our stocks can go up. I think that's, of course, we're biased, obviously, because we hold a lot of stocks and a lot of the stocks we hold tend to be growth stocks, so that those are more interest rate sensitive, of course. So take it from a biased perspective. However, in my opinion, it's not really all about stocks going up, because I really do think that the Fed should cut rates. And in fact, I said on Twitter, which if you guys don't follow me on Twitter, you guys should, Andy Kwanjo, twitter.com/Andy Kwanjo. But yeah, basically I was saying earlier where I think the Fed should cut rates because interest rates are never they were never a good tool to use to control inflation in the first place. Like, yes, it kind of works. However, high interest rates, what they do is they kind of make the means of production harder to do, right? They make business harder to conduct. And their end result is that you slow down the business activity and you cause a decline in GDP and you cause a decline in growth. So I think a lot of the issues with inflation that we've seen are caused by the supply chain issues that were brought on by COVID. And then basically the supply chain was disrupted, and raising interest rates, they don't really help with supply. If anything, it actually might hurt supply. So I think bringing interest rates up is not really a great idea to deal with this. Of course, they need to raise it a little bit because they were at like 0 before, and that's way too loose. And of course, that contributes to inflation. However, they've already brought it to the highest. They've raised rates at the fastest pace in decades, right? So like 40 years, something like that. And, I think at this point, they've done enough damage. And, again, I point to Truflation where it's at 1.35%. At what point does it go negative? And this is something that no one is really talking about, in my opinion, that it can go negative, and it will if they don't cut rates soon. And I don't think the Fed is really prepared to handle the consequences of what happens when you have deflation. So this is like something they've been kicking this can down the road. They go, oh, like inflation's our issue. We're going to focus on inflation. We're going to tackle inflation. Okay, but at one point your problem isn't inflation anymore. It's the other side, which is unemployment going up and GDP slowing down. So I just think it's a bad idea to hold rates so long. And also, it's the national debt is also an issue, right? The United States is at $34 trillion of national debt. Now, I know not all of that is financed at the current rate. However, the longer they hold it, the more debt is going to roll into the higher interest rates. And that's going to become a problem where I think already right now, the interest rate payments, just the interest portion alone, is higher than the defense budget, right? So it's kind of like buying a whole new US Army every single year. And that is just completely unsustainable. So that's one aspect I think that the Fed really needs to think about as well. I know they say we're not going to get political, but this isn't about politics. This is just about budgeting, right? Like if the United States is a household and you're running a household, then the budgeting, the numbers just don't make sense. Like even if you can print money, then like that's not necessarily a good idea because that's just going to cause inflation again, right? So you got to think about the whole picture, and I just don't think that the Fed is doing a great job at thinking about the entire picture. Like if I was Jay Powell, I would have cut rates back at the meeting last week. But again, I'm not Jay Powell, and I'm not a master economist. I don't have a PhD. So maybe what do I know, right? But that's just my opinion. All right, no one has anything to add to that. I've like floored you guys with my unhinged hot take.
No, totally valid points, and it's respectable. Yeah, I mean, at the end of the day, we're all hoping for rate cuts, but Jay Powell, the floor is yours. It's kind of up to the guy up there at the DC. So
yeah, no, my point is that yes, we want stocks to go up, but it's not all about stocks, right? I am really concerned about the state of the economy and the trajectory of where things are going if we hold rates at super high levels for an extended period of time, because that can have negative consequences too. And the latest jobs report, I know people are going to bring this up, so let me just preempt this. The latest jobs report, I think they smashed expectations. There's like way more job openings, and there's way more people like getting jobs, getting new jobs than they previously predicted. And Biden is like kind of tapping on that report, saying like, look, Bidenomics is working. This is all like the credit all belongs to me. But I think if you look a little bit deeper, part of the issue is that people are getting laid off. They're getting like 2 part-time jobs or 3 part-time jobs, right? So you lose a high-paying full-time job, and then you get 3 part-time jobs that pay like a third of what you used to make, so that you can still maintain your lifestyle. But then you're working more hours, first of all, and even if you're not working more hours, you're working, just kind of in a fragmented way. You're working 3 like random part-time jobs as opposed to your original job. So on paper, it looks like, oh boy, we added so many jobs, but in reality, that's not necessarily a sign of strength, right? So I was wondering what you guys think of that. Like, do you guys think that is happening, right? Where people are getting laid off and they're getting a bunch of part-time jobs to kind of make up for their lost income?
Yeah, so on that front, I definitely think that is a major problem that's happening, both in the States and in Canada, because of the fact that the cost of living is such that it's uh, expensive, and then you add on the fact that there is reduced job opportunities for full-time jobs, and then we've got people who are going to be needing to take whatever they can get, essentially, and a lot of the time that'll be multiple jobs. So the whole using jobs as a metric, I think, is incredibly misleading, because the fact that jobs are not created equal. You replace one job that is able to support a family with 3 jobs that can't support a family. That sounds like you've made more jobs, but in reality, you haven't really improved many people's lives, especially if that one person now has to work all 3 of those jobs to afford to support their family, which means a lower standard of living for them, obviously. So I think that using jobs as a metric is basically it's one of those things that's extremely easy to suggest you're doing well, when in reality you're not necessarily doing well. But it's like it's kind of along the lines of like, when places use like statistics and stuff to prove their points, while using statistics that don't really mean what they're suggesting they mean. So it's kind of like along the lines of that. So I take your point, Andy, on like the interest rates, definitely holding them high will definitely slow down the economy and reduce our ability to adapt quickly in the short run to this changing economic market. So there is a bit of risk on that front with us keeping it at these rates for so long, and we don't really know necessarily what will happen in the long run with doing that.
Yeah, a great point. Dom?
Yeah, no, I'll kind of just like mention a few things. So not gonna put out any names or such, but I guess as an example, like if I were to look for specific roles that I am like experienced in, if I want to look for a new job, for example, I find that it's twice as hard right now and twice as difficult to get yourself an interview, good pay, just any opportunity whatsoever, and people are trying to do any measure to get job roles. So I guess that second job situation can happen for a lot of people, and that could be why that this job metric isn't the most accurate. And yeah, I guess that's it. I just thought I'd mention that too as well. I know a lot of people, actually, one thing, I know a lot of people too who have been like laid off and had to reevaluate, remove their like point of direction. So economy is pretty tough right now, especially the job market. So
Yeah, and just to add some more context to that, the Fed CME watch tool is saying that the chances of the next of March being a rate cut is around 15%, and the other 85% is holding steady again. So that's just how it is right now, and I think futures are a little bit red. So we're recording this on Sunday night, so we don't know how the market will open tomorrow morning, but from futures, it looks like the markets are pricing in no rate cut for March. So that's just how it shakes up right now. So yeah, we'll have to see, I guess. So if none of you have anything more to add, we can move on to maybe the next topic. Yep, great. So the next topic, you know who doesn't need a rate cut? Meta. So Meta has smashed their latest earnings report, and they've declared a dividend for the first time in the company's history at 50 cents per share, which is a quarterly dividend. So that goes up to a $2 per year dividend, which at current prices would yield around 0.4%. And Amazon also beat earnings nicely. It didn't go up as much as Meta, but it's another great check mark on the economy, I guess, or at least on the stock market. So it does seem like for now, I know we just mentioned how rate cuts are going to hurt the economy, but we're not seeing at least the big techs really hurting. In fact, they're beating all of these metrics and all these earnings expectations by quite a bit. So just to run through some of the data from the latest earnings report from Meta. So they reported the fourth quarter revenue to be 40.11 billion, which beat expectations of 39.01 billion. So they beat by just over $1 billion right there in revenue. EPS, they came in with 5.33, and the estimate was 4.91. So a nice beat there as well. Monthly active users, 3.07 billion, which beat slightly by the expectations, which were 3.06 billion. So they only beat by 10 million. But the fact that 3.07 billion people use Meta on a monthly basis is absolutely insane, considering that there's only 8 billion people in the world, and not everyone has access to the internet even, right? So basically that's the Meta earnings, and Meta shares went up 20% the day after they reported their earnings, and they've smashed through $400, and a couple more good days they're going to be over $500 per share. So the stock is at all-time highs, and just wondering, what are your thoughts on this? Is this evidence that the Fed has pulled off the so-called soft landing, which is raising interest rates to historically high levels at a historically fast pace without causing a recession? So do you think that the Fed has pulled off a soft landing? Why or why not? And if so, do you think that the earnings of tech companies will continue to smash expectations?
Well, I think these companies have so many people working for them, and inevitably they're always going to find a way to make profit and money and always do better. So regardless of like the financial situation, they're always going to pull through, it seems, obviously, based off the stock. And if there's a will, there's a way, especially for these big, huge tech stocks, for sure. And I was just thinking in the back of my head, I'm kind of kicking my head right now, so to speak. We all had an opportunity to buy the stock at 90. What was it? Sometime in like early 2023, 2022. I can't remember the exact number, but now looking at the stock at today's number of 474 versus $90, of which we could have bought it at, totally brutal. Oh gosh. And to add to as well, I think Meta is kind of like an exception, just because no matter what, people are going to use Instagram. I guess some people are using Threads. Depends on what kind of person you are. I personally don't use Threads that much, but people still use it. And Facebook, Instagram, people are still on that for sure. Like I'm on it daily, so you can't deny the the usage for that. So they're not going anywhere anytime soon.
Yeah, I mean, it's absolutely shocking. And again, some people might accuse me of trying to pump a bag, but believe me, I wish I could move this stock, but I'm just some random guy, so I can't pump it even if I wanted to. But I'm just gonna mention PayPal right here and now because I really do see a lot of similarities between PayPal now and Meta back when it was trading at $90 or whatever it was at its lowest point, because back then Meta was seen as a dead company. They're spending so much on virtual reality in the metaverse, and that's not panning out. And they've overhired, and their profitability is going down, and their monthly active users has like started to decline for the first time ever. So there was just bad news on top of bad news, right? And then now look what has happened, right? So they did a bunch of layoffs. They kind of reined in the costs, and then the stock just skyrocketed, because I think what the market misunderstands that fundamentally Meta is a very profitable business model, and it didn't stop being profitable. Yes, their monthly active users did go down at one point, and they did overhire, but those are things that management could easily take a few quarters to correct, and then the stock will go back up, right? So I think that's kind of what's happening with PayPal right now. Not financial advice. Don't just go out and buy a stock because some YouTuber or you heard it from a podcast. But I think PayPal is kind of the same story where people are saying it's an old company, it's their business model is not working. Well, they're still profitable, right? They're still making money, and they just got a new CEO, and he's doing layoffs, which is unfortunate for the people that are getting laid off. But the fact is that once they finish these layoffs, their costs are going to be reined in, and then you're going to see that profitability go up. So I really do think that, and also PayPal's trading at a forward PE of like 11. So, you would think that just from looking at the PE that they were selling bricks or something. It's like a brick making company, but no, it's like one of the biggest fintech companies in the world, right? So I really do think that you don't have to be sad, Dominic, that you missed the Meta train, because PayPal is, I think, one of the candidates for the next Meta-like run. But that's just my opinion. But bringing it back to Meta, Tristan, what do you think?
Yeah, I think we're all a little bit kicking ourselves for not jumping on the Meta train as much as we could have, or at all for some of us, So I think we're all a little bit, it's not surprising to me seeing it back at this price, because I think that Meta as Andy was saying, Meta's like very profitable business, and they have a lot of things to make the company very desirable, and make the company very influential in terms of like the amount of power and the amount of like financial backing they have behind them. So they're not going anywhere anytime soon, and they have the fact of the matter is that they pretty much have cornered the social media market pretty aggressively. Like almost every major social media site is in some way related to Meta. WhatsApp, Instagram, Facebook, all of those are huge sites. Like they've got that down. And I know everyone was very bearish on the whole metaverse and everything, but I think that in the long run, that sector has a lot of potential that makes Meta have like an area that makes it a little bit more unique compared to some of the other competitors in the field. So I think Meta will be doing well and continuing to do well. I'm not surprised that it's doing well. And yeah, I think it's regarding what Andy was saying earlier with, is this a sign of a soft landing? I'm not sure if this is a soft landing per se, because Well, I understand that these prices are rather high for the stocks. Like they're going up, they're at new all-time highs. At the same time, like there's more money supply theoretically available in general because of the fact that there was so much inflation there. So, I think some of this will just be the result of there being high inflation. There's just um more money kicking around, and because Meta is an asset, not a and it's not depreciating, there's going to be a lot of it's going to tend to trend higher just in general, as a profitable company that will be, managing to still generate returns, and clearly supplying a dividend is another way that they're generating returns to their shareholders. So I'm not sure if this is showing a soft landing by itself along with the other companies doing well in the S&P 500, but it's definitely, I would say, better for it to be higher than it to be lower, so there's that.
Yeah, and I think that maybe the argument against a soft landing is that a lot of these gains in the stock market have concentrated in what's called the Magnificent Seven, which are just the seven biggest companies in the S&P 500. Or some people say Magnificent Six because Tesla hasn't actually been doing that well. So, Jim Cramer is advocating for Tesla to be kicked out of the Mag 7. So it's the Mag 6 now, according to Cramer. But maybe that's a bottom sign because inverse Cramer, and he's, tend to be always wrong. So, but yeah, I mean, regardless, maybe it is a valid argument, I think, to just kind of say that the market breadth, which means that like it's very concentrated, right? Like all the gains are concentrated in the Mag 7. So maybe that is a problem going forward or maybe it will be a problem going forward for the stock market, whereas other stocks are not really going up pretty much at all, and then you have the Mag 7 just taking off. But yeah, I mean, maybe that could be a debate for another day. One final note that I wanted to make, to go back to what Tristan said earlier about the metaverse. I think that with the release of the Apple Vision Pro, there's kind of momentum, at least in my opinion, that I feel in the metaverse space again, because Apple doesn't call it a metaverse product, but essentially it is exactly that, right? So it's augmented reality. They call it spatial computing or something like that. But yeah, anyways, Apple always has to come up with their own terms for things that are just completely just normal, where other companies would call it a normal name, but Apple has to get fancy with it. But regardless of what they call it, I think the Apple Vision Pro is a metaverse product that has gained a lot of momentum, and a lot of people are talking about it. And despite lackluster sales that's mostly because of his high price tag, right? But I think the people that can afford it are the tech reviewers who are making YouTube videos about it. It is really cool, and I think that will bring a lot more interest. And Meta owns Oculus, by the way, so uh, they bought Oculus as a metaverse investment way back in the day, and the Meta Quest is significantly, even the most expensive one, is significantly cheaper than the Apple Vision Pro, right? Sure, it doesn't, like, maybe it's not as cool as the Apple Vision Pro. It doesn't have as many features. It doesn't look as nice, but just the fact that it's a lot cheaper, it's a lot more accessible, I think it's going to draw a lot of people to like kind of at least think about it, right? Because people might see a video on Apple Vision Pro and be like, that's so cool, but I can't afford it. Oh, wait, what's this? Meta Quest? I might get that instead, right? So I think maybe there's going to be some of that going on. And I think that's another bullish tailwind for Meta stock.
Yeah. Sorry, just to jump in there on that front, quickly. The Quest and the Quest series from from Meta, they are by far the most sold and the most purchased VR devices, period, like they've got like 80% or more of the VR space cornered in terms of who owns what devices. So that's another very bullish factor on that front. Sorry, Dom, you can go.
No, no worries. I had the time to check the prices for the Meta Quest. So it looks like in Canadian, it's $849.99. So that's obviously a lot cheaper than the Apple Vision Pro, which is kind of crazy. And then to what Andy said is exactly what happened to me. So if you guys remember, I sent you guys last night the Casey Neistat video of him just walking around New York City with his Apple Vision Pro. I didn't really look too much into it, just besides us talking about it the last podcast. After watching that video, I'm like, damn, it's actually really cool. He was like walking in the middle of the streets of New York. He had his windows open. Sometimes when he was moving, like the windows would disappear, but otherwise it was kind of like borderline dystopian. It's kind of, I don't know, like Wall-E vibes. Like, I don't know if it's good or bad, but it's cool nonetheless. You can have a window on the side while you're walking and going to places. And then that actually led me to take a look at the Meta Quest 3. I'm seeing here now that's way cheaper. So it honestly is go ahead.
If you want to go even cheaper, the Quest 2 is only $350.
Oh damn. Yeah,
Like
see, there you go. Yeah.
That's Obtanium.
That's like I guess like a budget no-brainer, right? It's it definitely led me to looking into it a lot more. So yeah, that's for sure.
Yeah, I mean, to the note of it being dystopian, I have seen pictures of just like tech bros wearing it while like at dinner or just in a restaurant, or like some people even wear it while driving, which is definitely not recommended. But yeah, I mean, because it has the camera pass through, right? So it's kind of different than maybe the Meta Quest, where it's like a fully virtual reality kind of scene. But with the Apple Vision Pro, it's like the camera passes the what's in reality through to your eyes, but it just augments things on the reality. So you can technically still see through it, and you can see other people when you're wearing it and walking around. So that makes it slightly different. But yeah, I mean, it is, to Dom's point, kind of dystopian, where you have a bunch of people just wearing these space looking goggles and headsets and not interacting with like things that other people can see, right? Because they can see this stuff. And like, it's just, if you want to watch a movie with your significant other, like you can't, because it's for one, right? So you're just sitting back and watching a big screen while like everyone else sees nothing. But yeah, I mean, I guess that is the reality that is being brought forth by Apple. So whether you like it or not, it's coming.
The Quest 2, I know it also has pass through via cameras on the outside. I'm not sure about the Quest 3. I haven't looked into that one in specific, but the Quest 2, you can pass through. It kind of sucks. It's black and white, but you can see through the outside cameras, similar to the Apple one. So I hope no one's driving like that. That's just sub-zero IQ.
Oh, well, I've seen one where somebody's wearing the Apple Vision Pro and in a Tesla, presumably with autopilot on. So
Man, you can't wait to watch your porn at home. Like, come on.
I mean, some people, right? Anyways, I think that's it for that news on Meta, unless you guys have anything more to add. Why don't we? Yeah, go ahead.
We didn't talk much about Amazon too much. I felt like we can't leave someone behind. But do you mind if I just mention a few things about it?
Yeah, no, go ahead. Yeah, Amazon smashed earnings as well. I didn't have the data for how much they beat, but from my understanding, it was a triple beat for Amazon as well, and their stock went up, I think, like 7 or 8% the next day. So quite a significant amount as well.
And just to add to as well, we fortunately were on this boat, so we're giving ourselves a little pat on the back for buying the stock at the right time. So at least we got that one going. And not financial advice, but PayPal. Let's see if I'll be a contender in the court. You know what I'm saying? So we'll take a look and see. So I'll pass it back to you.
Yeah, no, not. I don't have that much to add on Amazon. I think like obviously it's a great beast of a company, and like don't get in the way of Amazon. And yeah, that's pretty much all I have to say. I mean, like, I know like the stock has gone up a lot too, but this is at the end of the day, these companies like Meta, Amazon, Apple, you can't bet against them, because like they're the stocks they're the companies that are changing the world. And yes, if you look at it from a valuation standpoint, you might make an argument that this stock is too high, blah blah blah. But like, yeah, the market can remain irrational for longer than you can remain liquid. I think that's a Warren Buffett quote, if I'm not mistaken. So yeah, don't bet against these companies. Is kind of not financial advice, but personal advice that I have for all of you. Anyways, if there's nothing more on that, let's move on to the next topic, which is still somewhat tech related and social media related, actually. And that is TikTok. So not just TikTok, but social media companies in general. So basically what happened was the United States Congress brought a bunch of these, the CEOs of these big social media companies like Zuckerberg of Meta and Mr. Shou Chu, who's the CEO of TikTok, among other CEOs. I think Evan Spiegel from Snapchat was there as well. Some of them came like not willingly, because they had to be subpoenaed, and some came just willingly. But they got all these CEOs hauled into a room and just questioned them for hours and hours. And what's interesting about the TikTok one is that we all know that TikTok's parent company, called ByteDance, is a Chinese company. So I think the United States government, the senators, were especially harsh towards Shou Chu, who's the CEO again of TikTok. And there's this one exchange. I'm not going to play the video because it's too long, but I'm just going to read you one exchange that occurred between Senator Tom Cotton, who's from, I think, like Arkansas or something. Correct me if I'm wrong, but he's a senator, and Senator Cotton questioned Shou Chu and asked him point blank, "Have you ever been a member of the Chinese Communist Party?" And Shou Chu replied, "Senator, I'm Singaporean. No." And this wasn't the only exchange, by the way. So if you watch the video, I'll see if I can find a clip of that video and link it down below in the description. But basically, Cotton goes and just basically questions him in like asks him the same question in 5 different ways. It's like, "Have you ever been a member of the Chinese Communist Party?" And he says no. And then it's like, "Have you ever been affiliated with the Chinese Communist Party?" It's just various different ways of asking the same question. And he keeps saying, "No, sir, I'm Singaporean. I'm Singaporean." So I think I have 2 questions, right? So number one, should TikTok be banned in the United States? And number 2, judging from this exchange that I just told you guys about, does this reveal some systemic racism in the United States, right? Because again, you guys know me, I'm the furthest thing from like a social justice warrior lefty that you can get. But speaking as an Asian Canadian, I really do see this exchange as being somewhat racist, right? So the reason why I say that is because clearly he's asking Shou Chu this question because he's an Asian looking man who has an accent. So if it was Zuckerberg, right, or if it was someone else who doesn't look Asian and doesn't have an accent, then I don't think Tom Cotton would get up there, even if they're the CEO of like a Chinese subdivision of like a company. I don't think a senator would get up there and be like, "Hey, have you ever been interacting with the Chinese Communist Party, or are you a member of the Chinese Communist Party?" Right? Just because like he looks Asian, oh, he must be a member of the CCP. So I think there's some like racism going on, but I'm open to a debate on this, and I'm open to different opinions. So those are my 2 questions: do you find this exchange to be racist, and should TikTok be banned in the United States or in Canada for that matter?
Okay, I'll go first. Without saying too much, because I do not want to get canceled, so I'm gonna preface by saying that. So it's like we have a podcast, right? It's the Zillennial Money Podcast. By the way, like, follow, and subscribe to our podcast. And if we ever had a guest, I think it's respectful for us to at least do a little bit of research on the guest before the guest actually coming on to the show, to know a few things about the guests and to ask the guest specific questions because of what we already know. It's like I had the opportunity to watch a few of the clips from the hearing, and honestly, it looked like he didn't do any research at all. It seemed keyword ignorant. Reference to our last podcast, by the way.
You mean Senator Tom Cotton, correct?
Yeah, to confirm. Yeah. I think without saying too much, I think it would have been better if he just did a little bit more research on the people he was quote unquote interrogating before just going guns blazing. I'll say that. That's the amount I'll say. And then if TikTok should be banned, well, like from my perspective, it hasn't caused me any issues. Go ahead and follow Dominic Gong at TikTok. I do post there as well, so promo any chance I get. I think it's kind of creepy how it knows what I want to watch and stuff, but it hasn't done me any bad, and I guess it's a little addicting. But to get banned, I don't necessarily think that should be the case, because we may eventually post on it eventually, and I still post on it now. So as of right now, I'm pretty mutual with it. So that's my thought. And then to you, Tristan.
I have a important question. Do we think that Tom Cotton knows, one, where Singapore is, and two, that Singapore is not in China?
You gotta do your research, is all I'm saying, man.
I'm like genuinely, like, you think this man is aware that this is a different country? Because this is peak American politics. If he's not,
I mean, so my theory for that is that, like, I mean, to be a senator, maybe I'm like overestimating American politicians. Maybe they are just that dumb, but I don't think he's necessarily that dumb that he doesn't know that Singapore is not part of China. But I just think that he's trying to make a show of it on purpose to his constituents, because, again, he comes from a very conservative state where, in the deep South, where, you know, a lot of people are like, oh, F China, like, we want our politicians to stand up against the CCP. And he's just kind of like so-called throwing red meat to his constituents to show how strongly he's pushing back against the CCP, even though the person that he's pushing back against is not part of the CCP and is not even Chinese.
What it sounds to me like you're saying is that he's relying on his constituents not knowing that Singapore isn't in China. Yeah, I think it's pretty clear that this is he's done, if he has done research, he is willfully showing that he's not paying any attention to it. So if Andy's take that he's just, you know, basically showing how tough he is on China by basically harassing the Asian man, you know, that seems like it's pretty much a like basically just being racist at that point. And I think it's leaning into probably the fact that the people in his constituents may be more aligned on that front than not, if that's the nice way to put it.
Right. So on that note, though, do you think, a second question, which I asked earlier, which is, do you think that TikTok should be banned in the United States or Canada?
Oh yeah, on that front, no. No. I mean, what's the difference between TikTok tracking everything I do and every other American company tracking everything I do. At the end of the day, someone's tracking everything I do. Someone's got it on a server. I understand that there are issues with the Chinese government, and to be blunt, there are issues with the American government. Either way, I'm not super into them both tracking me, but at the end of the day, who, like, should it be banned? Like, should TikTok be banned for doing exactly what all the American companies are doing? This seems pretty hypocritical to me.
Yeah, and let me just answer my own questions from earlier. Yes, I do think that this was a racist exchange, and I think Senator Tom Cotton showed his deep prejudice and bias in this exchange.
Y'all are crazy.
And yeah, basically, I mean, maybe we'll get some pushback from our American audience if you happen to be in the deep South, but like, this is my opinion, right? You have the right to your own opinion, but judging from what I saw, that's just how I think, right? So that's number one. And number two, I agree with you guys that I don't think TikTok should be banned. And my reason for this is just from like free speech, right? So I think that we can't walk down this road of just banning companies that have affiliations with China and stuff like that, right? Because then we walk down the road of banning companies that have affiliations with Russia, which like we've already done to an extent. But then like it's a slippery slope, right? And then you're gonna like just ban companies from any country that you don't like, and then at what point does that kind of violate human, like the rights of the citizens, right, to free speech and stuff, because you're shutting down a platform, a social media platform where people can voice their own opinions that you don't like, right? So I don't think we should walk down this road of just banning especially social media networks, which are kind of the mediums of free speech that we all use. So yeah, that's my opinion on that story. Not sure if you guys have anything more you want to add, or should we move on? No? All right. Let's move on to the next story then. So the next story it's not a current event, but this is something that I just kind of came across while I was browsing Reddit. So one of the Redditors on Personal Finance Canada was so kind to do a kind of comparison between Wealthsimple's portfolios versus other portfolios. So for those of you who don't know what Wealthsimple is, think of it as the Canadian version of Robinhood, except they also offer what's called managed portfolios, which is it's like a mutual fund, but it's like a robo-advising service, right? Where they offer this fund that you can invest into, and because it's mostly managed by computers, sometimes advisors will kind of dictate the macro direction, but day to day is just kind of managed by a computer. And these portfolios tend to offer much lower fees than your typical mutual funds. And also Wealthsimple is kind of like a cool new fintech company that appeals to young people. So a lot of people who are getting into investing for the first time, just like with Robinhood in Canada, a lot of people tend to just use Wealthsimple as their first foray into the investing world. So again, if you're not super familiar with investing, you might be tempted to use one of Wealthsimple's managed portfolios. So I'm going to put up this chart, which was posted by the original poster of the Reddit post. And this chart shows the 3-year and the 5-year annualized returns of the Wealthsimple portfolios. And there's I think 3 different macro categories. You can fine tune it a little bit in the Wealthsimple platform, but there's 3 major categories, which are conservative, balanced, and growth. So they compared it to kind of the equivalent Vanguard fund, which is like passive investing. Passive just means that there's no advisor sitting there making like day-to-day decisions. It just kind of follows an index. And it compares it to RBC's mutual funds. RBC is Royal Bank of Canada. It's the largest bank in Canada. So once you compare the portfolios, there are several things to note with Wealthsimple. So one thing that this Redditor noted, and I think everybody kind of noticed, is that Wealthsimple chronically underperforms both the RBC portfolio, and it majorly underperforms at a lot of times the Vanguard funds, which are again passive funds. So yeah, basically there's three different macro categories. The conservative is made up of 35% equities, and the rest are bonds. And the balance is made up of 60% equities, again, with the rest being bonds. And the growth portfolio is made up of 75 to 90% equities. So this is the chart, this is the data, and this is not, my opinion. This is just fact, right? Wealthsimple has underperformed. So my question to you all for tonight is that, do you think that, what do you think is wrong with Wealthsimple, first of all, that they chronically underperform? And is there anything that they can or should do to improve? And do you find it acceptable that they offer this product if it's going to chronically underperform the market, right? Are people wasting their opportunity costs investing in Wealthsimple's portfolios if they can get a much better return just doing a passive fund? So, several multifaceted questions. Curious to hear what you guys think.
Alrighty, Spidey. So regarding whether or not they should be able to offer a service that is underperforming the market, I would say yes, they should be able to offer it, because of the fact that while it is underperforming the other fund, it is still an improvement over not investing at all, right? So yes, it's not as good as the other funds, but it still has some utility because of the fact that it's so easy to set up. It's so helpful for like noobs who are just starting out in their investing career. There's a lot of value in them just honestly getting their feet wet in something that makes a lot of sense to them. It's very easy to follow through, and they can invest in it. And yeah, it's a little bit worse, but mutual funds can be a little bit worse, and that's often where a lot of other people get their first foyer. So typically, you don't get the largest returns in your first foyer into the investment market. So I think they should be able to offer this service because it still provides some utility. As to why it underperformed, it really comes down to what equities the spread is in their portfolios. Like if they have if they've selected ETFs and such that have been underperforming, then they're going to underperform by definition because the fund is made up of those ETFs. So for example, like if there's a large percentage of the portfolio in emerging markets, and emerging markets has been not very good, then the Wealthsimple portfolio will underperform in that sector. Now, I mean, obviously the other groups are probably also having emerging markets, so theoretically similar things should be underperforming. So without knowing exactly what is in all the other options, it's difficult to say exactly what is stopping Wealthsimple from performing superior to the other ones. But it's definitely a bit surprising that they haven't managed to be. I mean, I guess they're sort of competitive-ish, at least with regards to the balanced and the the growth categories. But the conservative one, I'm surprised to see how mediocre it performed compared to the other ones. So yeah, I think it's pretty much just sometimes they pick winners, sometimes they pick losers, and it looks like the Wealthsimple bag has got a lot more losers than winners compared to the other two.
I can also mention, I guess, a few things as well. So yeah, it's kind of hard to know exactly what's in each and every one of these. I guess you want to call them ETFs. Like we don't know the specifics or whatnot. I think to give the benefit of the doubt, I guess the economy lately hasn't been the greatest, so that could be a lot of the reason as to why these aren't doing as well. Maybe it just so happens, like Tristan said, they've been picking the bad apples instead of the good apples, and then as a result, this is the case. And what was
So
the
just to jump in here, the Vanguard ones are publicly traded, so you can look up exactly what's in the Vanguard ones, at least.
Oh yeah, I guess for the most part. Like speaking of Vanguard, I'll be frank with you. I think this is all a complete waste of time. You should probably just invest into an S&P 500 index fund if this is your, bag of apples, bag of like fruits. I personally like VFV, and then if you're in the American markets, you can try VOO or SPY. I think those are fantastic. I know I'm gonna give the floor for Andy and Tristan to tell you as to why VFV might not be the reason, but I subjectively think that with compound.
Actually, Dom, just to cut you off a bit, VGrow is VOOG. It's the Canadian version of VOOG. So it's actually VGrow is actually the same as VOOG, which is the growth version of VOO. So like the difference between VOO and VOOG is that VOOG has more, I think, tech stocks and has more growth oriented stocks. So like the Vanguard ones are sort of market index funds. And as I said, they're passive, right? So it is the like index funds that you
Oh, like enjoy, right? Okay.
yeah.
Well, like at the bare bones, like I like to keep my investing strategy really simple. I just stick to VFE primarily, and then just dollar cost average and allow compound interest to, accumulate with that over time. I don't do like deep research into the other Vanguard stocks, but maybe I should. But yeah, maybe Wealthsimple needs to make better baskets of choices. I guess it's hard to say if you don't know exactly what's in it. Maybe make that whole system more efficient. And I can't remember the first question you asked before. What were the questions again? Sorry.
So I guess my question is that in paraphrased in a different way, maybe I can make it a bit more clear, is that do you think that Wealthsimple is violating their fiduciary duty? And fiduciary duty is it's like a key term used in finance where you as a money manager have a duty to your investors or people who trust you with their money to kind of best allocate their money. So is Wealthsimple violating their fiduciary duty by underperforming the market chronically? Should they take some responsibility for underperforming the market, or do you think that this is just it's just maybe they had some bad luck and it's fine and whatnot?
It could be more just like the market and like the current situation. I'll be honest with you, there's a lot of other like much worse investments out there, such as like bank mutual funds or GICs. So I think as Tristan said, it's okay for them to continue to operate this program. So it seems like it's very easy for new investors to come in and then try this out. At least it's earning more than nothing in general. We're all trying to beat inflation, right? Keeping our cash into investments so we can try to either match, if not pass inflation, because keeping it straight in cash is probably the worst thing you can do. So yeah, I guess I'll say that for now.
You guys want to hear my totally biased hot take?
Yeah, totally. I'm for it. I'm expecting a Bitcoin at least like a few times. I'm ready for it.
Yeah, so you hit it right on the head of the nail. I think the issue with Wealthsimple is, in one word, Bitcoin, where they're just totally ignoring Bitcoin as a great portfolio hedge, right? So, I don't have the numbers ready to prove it or anything, but my hypothesis is that if you were to rerun this calculation, but add 5% Bitcoin into all the Wealthsimple funds, that they will be the best performing out of the three, right? So all you need is 5% Bitcoin into all those portfolios, and then all of a sudden, you go from being the worst to the best, and you will beat the market with only 5% Bitcoin, right? So I think you guys are being a little bit too nice to Wealthsimple. I think that Wealthsimple is violating their fiduciary duty to their investors by ignoring Bitcoin and not adding any Bitcoin to their portfolio. So I think if you set your risk tolerance to max, again, I'm not saying that they should add it to every single one. So maybe so for those of you who don't know, Wealthsimple's managed portfolios have a risk score from 1 to 10, with 1 being the most risk averse and 10 being the least risk averse, meaning that they'll put more equities in your portfolio if you go with 10. So if you go with 10, not only do they put, I think 90% equities, they also put 5% gold. So they do use gold as a portfolio hedge. But as we know, gold hasn't been a good portfolio hedge for a long time, right? So I know people who are gold bugs are going to get mad at me for saying that, but look at the data, right? Look at how gold has performed. Sure, it hasn't crashed through the floor, but if you compare it to just any the S&P 500 or anything, gold has performed terribly for the past decades, or going back, right? So yeah, I don't think adding 5% gold is working. So what I would like to see with Wealthsimple is for them to add 5% Bitcoin, right? So maybe you can keep the gold in there and do 5% gold, 5% Bitcoin, right? Just to, balance things out and see what works best, and then do 90% equities, and that'll be your growth portfolio, right? And for your balance, maybe do 3% Bitcoin, and then with conservative, do 1% Bitcoin. But at least, put that portfolio hedge to work, because that's what Bitcoin is kind of designed for, in my opinion. And it's just a shame that Wealthsimple's not seeing that. And I think that, if anyone's watching this, Wealthsimple, if you're watching this, or any other fintech company is watching this, and you want to do a managed portfolio, just adding 5%. I'm not saying going all in, right? Because then you just become a Bitcoin ETF, and we already have those. But just put 5%, and then just literally wait and see what difference it can make for you and your clients. So that's all I have to say around that. And yeah, any thoughts on my hot take?
I don't think it's a hot take at all. I want to actually defend you. I myself, okay, I'll be honest with you, I'm not as bullish as you two in terms of Ethereum or Bitcoin or cryptocurrency in general, but I say it's kind of ignorant to not be involved at all. I personally have about 5% of my net portfolio inside of BTC and ETH, and I'll be frank with you, it's actually treating me pretty well. With the small amount that I consistently dollar cost average, it is actually feeding me rewards that I never actually expected that it would. So long as if you just put your money into different sources, or just put it into BTC and ETH, not financial advice, but I think it's recommended, if anything, to just invest into those sources if they are provided, because why not? Especially since we're all in our 20s, it's kind of a no-brainer, I think. But I think it's not a bad idea for Wealthsimple to put inside of their packages, or ETFs, whatever you want to call it too. I think it'll actually do itself numbers. So I agree with Andy.
I think regarding that front, I think also the growth one, I feel like if my risk is at 10, why not throw some Bitcoin in? Honestly, there's Bitcoin ETFs. Canada's had them for a long time. Why not just add some to the portfolio? My managed section of my in my Wealthsimple, I have the Wealthsimple Invest, and I have it set to 10 10 risk level, and it is still extremely not risky. This thing does not move up quickly. It does not move the S&P 500 is up humongous amounts, and this thing is up very small amounts. So it's pretty clear to me that it's not going to be zooming to the moon. And as a growth, what's it called? Like a growth portfolio, I would expect it to be taking honestly a more risk, because if my risk is at 10 and I'm going, I can handle the 10 risk, you should be taking a bit more risk. And if and Bitcoin represents an area where, you know, you might argue there's more risk, but there's also more rewards. So I think it would be a pretty prudent addition to have it doesn't even need to be 5%, but like some exposure to it in that portfolio, I think would be a benefit to the portfolio in general.
So I guess maybe my hot take, like the maybe part that's like the most controversial, is the following statement, and I'm wondering specifically if you guys would agree with this statement, right? So as I said earlier, the hot take is, I think that every finance manager or every money manager is violating their fiduciary duty by allocating 0% to Bitcoin, if they're allocating 0% to Bitcoin. So I'm wondering if you guys would agree to that statement.
I think it like I hate to like run around the question, but it just depends on like the target market. Like what if these like would you want to call them like hedge funds or something or whatnot? What if these like hedge fund managers so happen to implicate like Bitcoin into their portfolios, or like let's say these like listed here on the side. Some boomers may not like that because they're not willing to understand. I feel like a certain demographic of people are at the point where they're pretty satisfied with their circumstances and they're not willing to learn or like develop new skills or like understand new things. So it might not be as open to them. So they might not actually get the demand. So maybe that's like deferring like these people to like not add Bitcoin in. It's such, but I think for Wealthsimple, I don't think it's too much of an issue to add like Bitcoin at least like 5% or below, just because I think the vast majority of people who are doing the Wealthsimple fund or this basket of investments tend to be on the younger side. For example, like millennial and like Gen X or just Gen Z. So I think for that, why not? So I guess that's my opinion.
So, on regards to whether or not they're violating their fiduciary responsibility, I think it's difficult to argue that they are violating their fiduciary responsibility, assuming that they don't understand Bitcoin. Because if they don't understand Bitcoin, I think it's really hard to argue that they should be adding something that they don't understand to their portfolio as a major portion of it. And now, I can see you're probably thinking, you know, then they should go understand Bitcoin, right? But I think that it's difficult to get these people to think outside of the ways that they've been set in, and
Yes.
learning to appreciate the value of Bitcoin is something that doesn't really happen overnight. So I think that it's hard for me to say you're violating your fiduciary responsibility when arguably the fiduciary responsibility is that they should be doing everything in their power to ensure that, you know, they're um doing their best to provide you the highest rate of return that they can. And theoretically, they are attempting to do that. And now the way they may be going about it may be flawed in the sense of that they should be learning about Bitcoin and making it a part of their portfolio. But the fact that they aren't doing it because they don't understand it, I think is also like something that is can be a good thing, because, you know, I don't really want to be sitting there watching my money manager go and dump all my money into, you know, some garbage coin that just popped out of nowhere because they've done no research, but they're like, I need to be part of the crypto market, you know? So again, I think that there is like I think that they could be doing better but I don't think that they are explicitly violating the fiduciary
Yeah,
responsibility.
but here's what I have to say to like push back on that, right? I think isn't their job to understand, like that's what you're paying the management fee for, right? Because like you as the customer, you kind of come from if you're assuming using this product, this managed portfolio product, you as a customer are basically saying to them, hey, like you understand financial markets more than I do, so that's why I'm entrusting you with my money, because I think that you will be able to invest better than I can. But if I understand, if I get to the point where like, you know, as a customer, I understand more than the advisor, then maybe like I don't need to give the advisor my money, right? And if I do, then like I'm paying the advisor to understand everything that there is to know about investing, which is why I'm trusting my money to them in the first place.
Well, I don't think that I don't think it's necessarily the same though as understanding the financial markets versus understanding the crypto market, because I know the crypto market is within the financial market, but there's different levels.
Yeah. So the crypto market is kind of like a new aspect of the financial markets that not a lot of people can understand right away, right? That I get your point on that. However, you know, Bitcoin has been a thing for over 10 years at this point. So it's like, at what point does it become a violation of fiduciary duty if you continue to ignore it, right? So you're saying maybe, okay, it's new, so it's expected that maybe not every financial advisor understands it, but like you have a cutoff, right? Like once Bitcoin hits 25 years or 50 years, well, if Bitcoin's 100 years old and there's still companies that are not paying attention to Bitcoin, assuming that Bitcoin is still around 100 years after it was like first issued, then do you think that at that point they will be violating their fiduciary duty? So if that's the case, what's your kind of cutoff?
I don't know if I have a specific cutoff in mind, but I think that like in terms of years, because I don't think the years is what really matters. I think it's the amount of people who have embraced Bitcoin. Like if it's become something that is like a major impact on the world, on the financial markets, more so than it is now. I think that it would be at some point there is like a cutoff point where it becomes violating their fiduciary responsibility by not doing something to
You just think we haven't reached that point
I
yet?
don't think we've reached that point yet. I think that's the big factor.
So I
adoption needs to go up.
The way I see it is, let me give you an analogy maybe, right? So let's say you bring your car to the mechanic and the mechanic fixes it wrong and your car breaks even more than it did before. And then you go back to the mechanic and you're like, what the hell, dude? Like, what happened? And then the mechanic tells you, hey, your engine type is new and I didn't learn how to fix this type of engine in trade school. So that's why your engine is now even more broken than it was before. Would you find that to be an acceptable answer, right? So I use that analogy because it's kind of like, you know, you're trusting your money with a financial advisor, and then the advisor invests it in such a way that underperforms the market, and you go, hey, what about this new Bitcoin thing that could have potentially helped you? And then your financial advisor tells you, it's like, oh, I never learned that in finance school, so I didn't pay attention to it, so I didn't add any Bitcoin for you, so that's why I underperformed the market, right? So like, do you think that analogy is accurate, or like what do you have to say to that in general? Dom or Tristan?
I'll go on. Yeah, no, it seems about right. I think it's a little ignorant that like these financial managers aren't learning a thing or two about Bitcoin. Like maybe in the worst case scenario, there'd be an option to have a set portfolio like implicated with Bitcoin, and then like for you to have the option to not have it. Because I know when people try to learn new things, especially at a certain point, like it could be hard for them to make changes. Like I'm pretty adaptable and open to change, but some people aren't. So I think that's the biggest concern. I think this financial system has been the way it is for such a long time. So to see a a new sheriff in town is a little tough to handle for some people. But I think looking the other way, if they're like walking down the hallway instead of saying hi, is kind of like also not the move as well. So maybe in the next coming years, before like 2030, hopefully that Bitcoin eventually gets implemented into I guess these portfolios. But it's let's wait and see, I guess. So
And just to jump in there regarding if like the analogy with the mechanic, I don't think it's necessarily directly the same. Sorry about that.
bless you.
I don't think it's directly the same, but there are some similarities because again, like in the example you gave of the mechanic, like theoretically the expectation would be that the mechanic would be doing something afterwards to make up for their mistake. You know, like there's the expectation that the mechanic is going to fix the problem. But like I don't think that
expectation that Wealthsimple adds Bitcoin to their portfolio after this, right? But I'm not sure if they're going to, because like, you know, people, you can show them this like performance chart and they go, well, that's just the market. They won't necessarily admit that like, oh, we underperform, we should do better.
But it's like not really the same as if they add it to it though. Like, and there's also like different levels of risk in the sense of like the risk of my car exploding or crashing or something to that effect, you know, on a highway or whatever, is a very high personal risk compared to the risk of missing out on gains from the market. Like one of those is like I could have done a little bit, like I could have done better, but I am not being negatively impacted. Whereas the car one, it's like my options are you're basically worse off across the board, right? You're theoretically at risk, and your vehicle has depreciated in value. Whereas in the other scenario, my car has it, like my investments may not have done this, but they've done like this, which I think is like a lot less of a punishment.
But you can lose money through like investing as well, right? Like it doesn't, even if you invest in the general market, it doesn't always go up. So let's say if you invested in there, I think one of them was actually negative on one of the time spans. So if you go back to the charts, yeah, so Wealthsimple Conservative, which is 35% equities, on a 3-year basis, the annualized return was actually negative 1.3%. So like it's not like the difference between this and this, it could be down as well, right? So I'm saying that, okay, so what if by adding Bitcoin, and again, I don't have the data to back that up, but I think that if they added 5% to the conservative portfolio, it wouldn't have been negative, right? So it could be the difference between a negative outcome and a positive outcome as well, right? And we're also speaking from a nominal basis, which, you know, these data that, you know, we're showing, it hasn't factored in inflation at all. So if you really want to be technical, maybe we should look at real returns, which is if you back out inflation from the numbers, right? And if you back out inflation from the numbers, I'm pretty sure a lot of these will be negative. Like a lot more of these will be negative than just the 3-year return from the Wealthsimple Conservative, right? So yeah,
right. But regarding the Wealthsimple Conservative one, like the people who are going to be investing in that are also not the people who are going to be comfortable looking at Bitcoin in their account and their as a investment going like, yeah, Bitcoin.
That might be true. Yeah.
These like, if you're buying conservative, you're very risk adverse, and the volatility of Bitcoin at this stage is still such that these people would see their account down a bunch a day and freak out, and then these people would see their account up a day and freak out. And like I don't think even in the scenario where Wealthsimple adds Bitcoin to the portfolio in some capacity, I really don't think that it's going to be the conservative one that is going to be one seeing the most benefits, and two having it even in the account in the portfolio.
Yeah, I'm gonna have to agree with
So
Tristan too as well. I think like at most maybe a very small percentage of Bitcoin or Ethereum in the balanced account, and then for the growth account maybe like 5% max. That makes more sense. But for conservative, I think the target market for that area isn't going to be so pro Bitcoin, but those people just don't know and haven't done enough research, I guess. So
I'm like,
I don't know, Andy, go ahead. I have a feeling.
I mean, so I think maybe the only part that we have a little bit of disagreement on is the way that we like view Bitcoin, right? So I view Bitcoin as the safe play, as like sort of the portfolio hedging kind of play. Like, yes, it's volatile, but as I always say, volatility is not the only measure of risk, right? So one other measure of risk is chronic underperformance. So if your fund that you're investing in is always underperforming the general market by multiple percent year over year, year after year, then I think that's the measure of risk as well. So yes, what you said about volatility, it is definitely a risk factor. But I see, so I think you guys see Bitcoin as a growth vector, whereas I see it as a growth vector and a portfolio hedging mechanism. So in a way, I kind of view it from both angles, where I see Bitcoin as both an area of growth that can potentially make you rich. Again, not financial advice. Don't just buy something because you heard it from a podcast. But I really do think that Bitcoin will go up in the long term. But I also think that it could add some stability to your portfolio as well, which is something that is kind of maybe a new concept that not a lot of people have accepted, and maybe that's the part that where we run into some disagreement, right? Where you see Bitcoin as just like a growth vector, but you don't see it as a portfolio hedge quite just yet. Am I correct in doing that? I don't want to take words out of you guys' mouth.
I think
That's definitely
too,
me.
yeah, I think on that regard, I think the like as a hedge, it's a hedge against inflation for me, but I don't think it's necessarily at the point where I view it as like a portfolio hedge, because I think the volatility factor I think adds too much variance for me to view it as like a full portfolio, like a portfolio hedge. Because until like in the future, when the volatility has come down because there's been higher adoption, I could see what you're saying, where it's like a much safer play. But at this current point, it's a little bit too volatile for that usage. It's more of a growth and like an inflation hedge to me than necessarily like hedging my portfolio itself. I'm sorry, Dom, I think you were going to say something.
Just like a small part. I think I kind of agree with Tristan. I think it'll do a lot in terms of like our personal like financial growth. Like I do invest into it as well. And it is a hedge against inflation, because if the gains gain, they really do gain. It's just I guess the vast majority of audiences, like for example, who are interested in the Wealthsimple conservative, may have heard a few things about Bitcoin and how volatile and like not fully understood of a coin, I guess, or like an industry it is quite yet. That might like defer people from possibly investing. People may not want to go into that route unless they have more information. It may be too early. So yeah, I guess I'll say that.
Trudeau sure encouraged people not to buy Bitcoin. So if you're on the conservative one and you're listening to the gov, Trudeau said no. Daddy Trudeau said no. That means no.
Oh boy. I mean, maybe we'll save that discussion for another day. Okay, so actually we spent a lot of time talking about the Wealthsimple story. I think we've said all that's needed to say. So why don't we move on? Because we do have one more story that I wanted to cover. And I don't want this show to drag on for too long.
No, I mean that was fun anyway, so no problem. All good.
Actually, the next story is somewhat related to governments and politics as well. So the next story, the final story of the day, is what I like to call a tale of two countries. So the two countries are Argentina and Canada, where we all reside. So as you guys know, or maybe you guys don't know, uh, Argentina had an election recently where they elected a supposedly extremist president named Javier Milei. Now, Milei ran on a platform of hardcore libertarianism, where if he were to be elected, which he was, then he would begin cutting a bunch of different government departments and laying off a bunch of bureaucrats and government workers and just basically gutting the Argentinian government and starting things from scratch. Just tear everything down and rebuild only what's needed and kind of shrink the size of government drastically. And he's proposed other things like getting rid of the Argentinian central bank and dollarizing the economy. So dollarizing means that they get rid of the Argentinian peso as the national currency because it's been inflated to hell. I think the annual inflation rate in Argentina, the latest read was over 100%. So if you think inflation in the United States is bad, then it's much, much worse in Argentina because they're at triple digits inflation. So basically, Milei promised to get rid of the central bank, and he's trying to follow through with that right now. And dollarizing the economy means that he's just going to use the US dollar as the Argentinian national currency from now on, which again, like it could help the economy, but it could potentially also bring a whole slew of other problems because then, because they can't issue more Argentinian dollars. They can't issue more US dollars in Argentina. That would mean that they'd be under the thumb of the Federal Reserve. But this is a strategy that other countries, for example, El Salvador, has adopted before they kind of went with the Bitcoin standard. And now El Salvador has both US dollars and Bitcoin as legal tender. So many are speculating that Argentina might go the same route, and add Bitcoin as well for legal tender, but we'll have to see that. But the news this week is that the Argentinian president, Javier Milei, just managed to push through his package of reforms to start his transition of kind of shrinking the government drastically. So there's over 300 laws that will be repealed or amended. State-owned companies are going to be privatized. There's going to be massive, massive deregulation. And basically, this vote has passed the lower house, which is kind of the more like important part of the parliament in Argentina, from what I understand. And the final vote was 144 yes and 109 no. So it wasn't incredibly close, but it was still maybe sort of close. So it's not like a vast majority of people are for this, but it did manage to pass through the lower house, and I think it's expected to pass through the upper house pretty soon as well. So that's the tale with Argentina. Now, the reason why this story is called A Tale of Two Countries is because now we're going to talk about our home and native land, Canada. So in Canada, I was just browsing again Reddit recently, and I know Reddit tends to be younger and more left-leaning, but I did see this petition or proposal for a petition that some people are proposing to deal with the inflation crisis here in Canada, which is, for those of you who don't know, Loblaws is I think the biggest grocery chain in Canada. It's not just Loblaws, but they own a whole slew of brands like No Frills, Superstore. And if you're not Canadian, you've probably never even heard of any of these brands, but just know that they're the biggest grocery chain in Canada. So think of like your Walmart, but in Canada. And some people are complaining that the grocery prices are just too damn high, especially at Loblaws owned grocery stores. So some people are starting a petition for it to be nationalized. Now, I made this tweet, which I will show you in post, but you guys can see it in the docket. It's a picture of Stalin making a very nice heart gesture. And my point with this post is that, in my opinion, and this is just my opinion, I really do not think that this is a great idea to nationalize the Loblaws. And I do think that this is step one on the road to communism. So, I know that just sounded hyperbolic and sensationalist, but before I kind of get into explaining my thoughts on it, I've talked for a long time. What are you guys' thoughts on it? And going back to Argentina, so we've seen two different ways that two different governments are kind of trying to deal with inflation, right? And I know this petition it hasn't gone anywhere in Canada yet, but this is something that is being talked about among the populace. And I do potentially foresee this movement getting more momentum, as a lot of people are mad at the grocery stores for inflation. So, there is a chance that I think some petition that are similar to this, that they can make it to Parliament and potentially influence government. So I just want to kind of get you guys' thoughts on the difference between Argentina and Canada, how we're dealing with inflation, and specifically maybe talk a little bit more on the Canada side. Do you think that we should nationalize Loblaws, or do you think this is a bad idea? So take it away, guys.
Well, as they say in economics, there are four types of economies: developed, developing, Japan, and Argentina. And Argentina has had issues for a long time, and I think a lot of that has to do with the fact that they have a tendency to nationalize private corporate companies and do so pretty aggressively, and then suddenly discover that that was maybe not a good idea, because you need some foreign investment. But what foreign investing company wants to invest in a country that has in the past shown more than willing to basically nationalize anything that is a company in that country? So I think from that regard, this act of them selling off state-owned companies and doing some deregulation will potentially, help with that problem of having everything a little bit too nationalized, and then there being more of these economic problems with them finding it difficult to compete and such. And I think that may help, but at the same time, they've kind of done this cycle a couple times, so I think it'll be difficult to see how that happens in the long run, because, well, this new president is making these changes now. What's to say that the situation doesn't get much better in the short run, because there's most likely going to be a very hard adjustment period. And if things get worse, people will not be happy, and there may be another election in the future that then brings in someone else who wants to nationalize everything, and then the cycle begins anew. So I think it's definitely part of the path to get them back on track, but at the same time, I'm not sure how that'll go. And now, with regards to the Canada side, I have heard of the petitions for nationalizing Loblaws, and I think that in the past it has been pretty clear that most industries, there are many industries that do not work better nationalized. There are some that I fully agree with being nationalized. For instance, like healthcare, I think that there's a conflict of interest with regards to the companies, like a private versus a public healthcare system. but we're here to talk about Loblaws. And I think that Loblaws is not, like, the grocery industry is not an industry in which that there is a real major value to it being nationally run. And in that regard, because of that fact, I don't think it's a good strategy for us to even consider nationalizing it, because I think it's just, we're going to be heading towards the route of, maybe we, even if we don't necessarily go towards communism, maybe we're heading towards Argentina, but in the north, where we nationalize things and then unnationalize things, and nothing gets fixed. I would say that if they're going to do anything on regards to that, like, I could see there being some argument to breaking up Loblaws as a monopoly-ish. But again, the problem with doing that is you'll most likely experience an increase in prices because, well, Loblaws is, a part of basically an oligopoly. Yeah, you know what I'm trying to say.
Oligopoly.
Oligopoly, that's the one. Of grocery stores in Canada. There is a lot to be gained in the grocery sector from the economies of scale, and if we break up Loblaws, that would harm their economies of scale. And I don't think the government would be doing a very good job at managing those economies of scale at the same time, and all the logistics that have to go into this compared to a private entity. All right, so I've said a lot, so I'll let you go jump in there.
Well, I think it's fine just because, well, I'm taking a look at everything, and I think I more so just have like questions in regards to like how everything works here, just because I'm not too informed about these specific topics in terms of like nationalizing blah blah. I'm not exactly sure, so I don't feel like I'm in a position where I should state an opinion necessarily about them. So yeah, I'll just like leave it at that.
So maybe I could like clear up some of your questions, Dom. So like, let's define nationalizing, right? So nationalizing means taking under the control of the government. So it'll be a government-run institution, a crown corporation, as we call it here in Canada, right? Which is like the crown, right? Like technically it's like the queen of or king of England, I guess now it is. But it's like the government runs that corporation, right? So basically, it's, if you think about how our healthcare, for example, works, that's run by the government. Our kind of school system, that's not the private system, because we do have a private school system as well, but the public school system, that is run by the government. And utilities to an extent, although they try to privatize some aspect of the Hydro One, I think it's called, in Ontario, where it was very unpopular because it caused prices to go up. So, maybe there's an argument that you can make for nationalizing utilities. However, as Tristan was alluding to earlier, I really don't think that nationalizing Loblaws is a good idea, because you're asking the government to do logistics, which is the thing that is absolutely horrible at. So it will be, the government will be the last organization I would trust with anything logistics related, and grocery business is all about logistics, right? When to deliver, how much produce to produce, and like how to like make time schedules match. The government is absolutely horrible at that. So my argument for that is that it'll actually make things worse. And I just want to kind of maybe explain a little bit about my comments on the road to communism, because I know like that's kind of like a big statement and it brings people's attention and it sounds like I'm fear mongering, but I'm really not. I really genuinely do think that we're going down a path that we don't want to go down with these petitions to nationalize Loblaws, right? So I actually think that wasn't even going to be step one. Like, that was going to be step two. So step one, I thought was going to be people advocating for breaking up Loblaws, which I also think it's a bad idea because, if the goal is to bring down grocery prices, then breaking up Loblaws, I really don't think will help because, like, if you've ever been to a convenience store, like a small mom and pop shop convenience store, and then you go to a No Frills, who's lower prices, like who has lower prices, right? Chances are it's going to be the No Frills. Why? Because they have economies of scale, right? So when you break up Loblaws, then you disrupt that economy of scale, and it causes prices to rise. So my original kind of fear is that people won't realize that fact, and they'll sign a petition and motivate the government to break up Loblaws. And if that actually happens, then prices go up. People are going to be even more mad. They're going to be like, oh, all these smaller child companies that was formerly Loblaws, they're colluding with each other. That's going to be the next narrative, right? They're colluding with each other, so we're just going to nationalize all of them, and that way they can't collude. And then what happens after they nationalize? Government's less efficient, so they're going to run the stores horribly, and you're going to have empty shelves because they can't get the groceries to deliver on time, and it's just going to cause prices to rise even more. And then the government, at that point, they're the ones that are running the grocery store, so they can't blame the grocery stores for inflation anymore. So what's going to happen then is that they're going to be like, okay, we're going to implement price caps, right? So you don't like the fact that bread is $5 a loaf. I'm going to make a law that says that bread can't be more than $2 a loaf. So basically, the government at that point will be making inflation illegal. They will pass a law to outlaw inflation. And that has never worked, and that will never work. Why? Because let's say if it costs $3 to produce a loaf, and you mandate that it cannot be sold for more than $2. So every loaf of bread, you're losing $1. So what's going to happen then? Well, they're just not going to sell more bread. They're just not going to sell bread at all, because why would you sell bread if every loaf you're losing $1? So yeah, my point is that you can mandate anything be any price. You can mandate that Lamborghinis be $1 each, but they'll be permanently out of stock. So prices can be whatever you want them to be as long as there's no stock, as long as the shelves are empty. So that's exactly what's going to happen with groceries if we start nationalizing the grocery chain and price capping things to try and outlaw inflation. And that's just going to be disaster upon disaster. So I watched this video on the economic crisis that's going on in Cuba right now. So a lot of people might not know what's happening in Cuba, but according to the report, I think it was by MSNBC, 2 cartons of eggs. So a carton is 30 eggs, the standard size carton. So 60 eggs cost more than the average monthly salary of a state worker in Cuba for 60 eggs. And 1 tank of gasoline. So gas stations, all gas stations in Cuba are owned by the government. So there is a state-owned enterprise. And the government has been giving huge subsidies to lower the price of gasoline artificially. However, they're running out of money and they can't afford to do that anymore. So they just one day decided that they're going to raise the price of gasoline by 500% pretty much overnight. And that is absolutely crushing. So 1 tank of gasoline, again, would be, I think it was almost the price of a month's worth of the average salary of the average Cuban. So imagine 1 tank of gas costs you almost as much as what you make in an entire month. And you still have to use what's left over to buy groceries and whatnot, and the expensive eggs, which you now can't afford. Well, you couldn't afford it before, but now you can't afford it even more. So that's kind of, I think, the road that we are flirting with in Canada if we continue to be, misled about this grocery issue. It's not even a grocery issue. It's just an inflation issue, right? I think our politicians have essentially lied to the populace and convinced a large portion of, and again, I don't want to sound partisan, but it's left-leaning young people, right? Like, let's just call it what it is, right? I'm not trying to be biased here, but that is the fact that a lot of this support for nationalization is coming from younger folks and from left-leaning folks, right? So our government has put on this propaganda campaign to convince younger folks, left-leaning folks, that inflation is actually caused by the grocery stores. It's not caused by the billions and billions of dollars that we printed out of thin air and injected into the economy. No, it's caused by Galen Weston, who's the CEO of Loblaws, of the entire Loblaws group, in case you guys don't know who he is. But yeah, it's caused by Galen Weston. It's not caused by us injecting billions of dollars. So I think it's a very dangerous narrative that the liberal governments, specifically the Trudeau government, is pushing. And I think it's going to lead us down a very dangerous path. So yeah, I've talked a lot. That's my thoughts, but let me throw it back to you guys now. First, Dom, did I answer your questions, or what do you think?
Yeah, no, way more. I think from everything that you pretty much have said, I think nationalization is not the best idea. Yeah, no, I don't think it's the move for sure. I think logistically wise, if I guess Loblaws company has figured it out far better, and then the government, for example, has not figured it out, that could cause a lot of cost effect issues, and then that wouldn't be a pro at all. That'd be more of a con, if anything. So I guess as Tristan would say, thumbs down, right? So and then otherwise, what was that second thing that you mentioned before of how, can you remind me of your second part? You said quite a bit, sorry. You were talking about could you like nudge my my memory a little bit, the second
Yeah,
part?
no. So I was saying, like, the politicians are weaponizing this issue in order to kind of put the blame of inflation on the grocery stores rather than taking responsibilities themselves for causing inflation by injecting money that was printed out of thin air into the economy. So I was wondering, like, do you agree that that is what's happening? And if not, if you think that it is, you can, I welcome a debate on this. So if you think that, it is the grocery stores who are price gouging people, then, you're free to have that opinion. But it just, in my opinion, it's kind of, our politicians are misleading us, basically. And a lot of people who don't have maybe the best understanding of economics are falling into this trap. And they're kind of like, the government is using their anger to get more votes, because the government can come out and be like, and I'm talking about the liberal government, Trudeau's government specifically, they can come out and be like, hey, we're the guys who are going to rein in Loblaws and the evil Galen Weston Jr., who's the boogeyman of everyone. And, we're going to punish him because he's the one that's price gouging us, rather than taking responsibility themselves, right? Like, do you think that that's what's happening, or do you think that it's like it's overblown and it is price gouging?
I think okay, this is like outside of the podcast, but I think there was this one time where Andy and I think when you're in Calgary still, we were talking about this kind of subject topic. And so in order for food to be priced at the specific price, there has to go a lot that goes into it. Like, I guess, for example, like apples, for example, to take the apples from the farm to the grocery store to grow the apples, the equipment needed to grow the apples, etc., costs a specific amount of money. And if you're not meeting those coverages and margining up so that you could pay your set employees, etc., then you're not going to profitably do well. And then I think things will inevitably become worse. So I think off the bread comment that you said earlier, it could be relevant, could be not. It doesn't make sense to make a law to make bread $3 if you need it to be $5 to pay everything you need to pay. So I guess the term price gouging, I guess, I think Loblaws is doing reasonable pricing based on the economy. And then I guess nationalization would make that worse, because it would go against economics and then in the end make things worse, I guess. I think that's where I'm getting at. I hope I sound right here, but I would say no to nationalization just based off all the information that Andy has told me. So
Yeah, and just to add to that, one more point, and then I'll toss it to Tristan. I just think that, like, people post pictures of price comparisons of different items. And my point to that is that you can always pick and choose you can always cherry pick certain items that are more expensive at Loblaws at any given week compared to any given other store, right? Because the prices are like always fluctuating, and different stores have different deals on different weeks. So it's like it's very easy for someone to walk into a Loblaw store and be like, hey, like apples are $5 versus they're $3 at Walmart, right? So Walmart is better. But it's just, if you look at, I don't know, like cold cuts, maybe Loblaws have like a bigger deal on that compared to Walmart, right? So like you can always pick and choose different items and say that Loblaws is price gouging just because a certain item is more expensive at Loblaws compared to somewhere else. But I haven't seen any like aggregate data to show that Loblaws is just consistently more expensive on average. And I think that the reason why that I haven't seen that data is because if you were to actually pull that data, you would realize that Loblaws is actually probably one of the cheapest options in general overall.
I agree. As a weekly grocery shopper, I agree.
Yeah, let me toss it to Tristan now because I've spoken for a long time.
Yeah, I think with regards to what you were saying about how the politicians are basically avoiding responsibility for causing a lot of inflation that has been impacting the price of groceries. I think it's definitely a lot easier for the politicians to blame the grocery stores than it is for them to take responsibility for the amount of inflation that they caused. And I think that it's also pretty clear to me that the inflation that they have been suggesting inflation has been lower than the actual inflation that has been ongoing. So they've been saying it's 5%, but we've definitely been feeling like it's higher than that at a lot of points where they've said it's 5% or 7% or whatever. It's definitely not going to be, it's not exactly what they say it is. And a lot of the times it's felt like it's been a lot higher. And now, with regards to whether or not Loblaws has been price gouging, I think that it's pretty clear to me that they are seeing a large increase in their expenses in order to maintain their business. So they're having to compete, and we have to remember that, like, for example, like commercial real estate and all of that stuff, all of that has been affected by the real estate pricing insanity that has been going on in Canada, and that's going to be a large cost for Loblaws. And then in addition to that, there's a price to changing the price. There's a lot of little prices that are involved in that, and maybe they have to bump up the price a lot of the time. Well, they'll have to bump up the price more because I would be pretty annoyed if I walked into No Frills and pasta is $1 on Monday, and then on a month from now it's $1.10, and then a month from then it's another $1.10. Like that, there's an incentive for them to basically change the price once, so you will accept the price, and they can run their analytics, their calculations, their assessments of the price. So and to take into account that price change dollar cost. So say maybe they go from $1 to $1.20, but they do it before they absolutely need to be at $1.20, because even then they'll have to take into account that the inflation has not finished coming down. So that $1.20 will eventually be essentially the same purchasing power as that dollar from before. But they've got to take that into account maybe a little bit sooner in order to reduce their expense of the changing the prices labels. And when I say changing the price labels, I don't mean like literally walking along and changing the price labels, because that, yes, there's a labor cost to that, but it's not the big price. It's the all the analysis that these companies have to do in order to go, is this a price that our customers will accept? Is this a price that they're willing to pay, or that they can pay, in order to purchase this product? So it's pretty clear to me that I don't think that Loblaws is sitting there taking a cut in their margin, but I don't think that they're increasing their margin significantly. Like, and I think that's probably the biggest factor, is that they're not. That when I hear price gouging, my expectation is that they're taking more than their fair share of the margin. And at the end of the day, I don't think that they are doing that at this point. I think that inflation was so high, and we didn't get clearly communicated to us how high that inflation was, that Loblaws is having to adjust to it. And as a result, people are seeing large price increases, and so on and so forth.
Yeah, and you know what? That's like a really good point that I think I want to hammer on as well, is that a frequently stated point that people have against Loblaws, and I think this comes from, again, a place where people maybe they don't have the best understanding of economics. So of course they would think that if they don't understand how economics works, but a lot of people have been using the argument of record profits against Loblaws, how Loblaws made record profits compared to the year before, and then every year, every quarter, they're announcing, when they announce their quarterly reports, because it is a publicly traded company, so you can look at their earnings reports. When they announce their earnings reports, their profit, that number becomes higher and higher. And I think what's missing from this debate, and where the misunderstanding is the difference between nominal rates and real profits, right? Like nominal profits and real profits. So what do I mean by that? So nominal is just the number itself, right? Whatever the number is. And real is when you take into account inflation. So for example, let's say if you run a business and you made $900,000 last year, and you made $1 million this year. So you made 100K more this year than you did last year. You made record profits, right? Because let's say you've never made this much money before. You've never made $1 million before, but this year you did. So you made record profits. However, what if I told you that inflation between last year and this year has been so bad that your $1 million now buys you what $800 would have bought you back then? Right, so your $1 million only has $800 worth of purchasing power. So technically, you made record profits, but your money buys you less. So the reason why I think Loblaws is making quote unquote record profits is not because they're actually making more money. It's because your dollar became worth less, not worthless yet, but worth less. Right. So I think that's kind of the misunderstanding. And again, this is why I keep hammering that we should teach economics in elementary school and high school. And it's a travesty in this country that we don't, because a lot of people just become fully functioning adults without, just a shred of understanding of how any of this stuff works. And then, you go up to them and you say Loblaws made record profits. And then, of course, they would think that they're being price gouged because, the numbers are bigger and bigger every year, but they don't realize that it's not that Loblaws is getting richer, is that your dollar is becoming worth less and less every year. So again, like, this is how I see things, but I was wondering if you guys have comments.
And just one additional thing on that front, folks, you do realize there are more people in this country than there were last year and the year before that. Funnily enough, more people mean more food needed to be consumed, meaning higher dollars being spent at Loblaws, because funnily enough, we don't have that many grocery chains. So a lot of people will be shopping at Loblaws. So if you add on 1 million people a year, like we are, I believe we did last year, that's a lot more people who are going to be buying groceries from Loblaws stores.
Yeah, and I just really dislike how people villainize Loblaws and like romanticize the idea of a mom and pop shop. But in reality, if you were to actually present them with a choice of going to the mom and pop shop or the No Frills store, they would probably go to No Frills because the No Frills would probably be cheaper. Like that's just the reality, right? And I think a lot of people are, I don't know, maybe it comes from just ignorance, but I think a lot of it comes from this, just like this disingenuousness, if that's the word, right? But yeah, that's my opinion. Dom, do you have anything to add?
No, I think I'm okay for now.
Don't want to get canceled, eh?
Yeah.
And again, like I know, like there's probably gonna be at least one person in the comments that's like, Andy is bought and paid for by Loblaws. Like, listen, I wish I don't hold any shares in Loblaws, first of all, right? I'm not a shareholder. And believe me, I wish Loblaws would pay me because then I would be able to take that money and buy some more groceries at Loblaws. But but they don't pay me, unfortunately, and I wish they did, but they don't, right? And I also have no shares in Loblaws, just to make that abundantly clear, because I know somebody's gonna comment that. Do you guys have are you guys bought and paid for by Loblaws, by the way? Do you have Loblaws shares?
No, I'm
No,
currently
sir.
not invested, but wow, all-time highs, all-time high of 136.06. Wow. And with the 1.31 dividend yield. Ain't half bad, I guess. They're not
Maybe
too
I just accidentally convinced Dom to become a Loblaws shareholder.
looks at stock daily.
Yeah, I gotta say, I don't think Loblaws was ever a company that I looked at and was like, you know what, I need to buy Loblaws shares. In
Agreed.
hindsight, I mean, it clearly the last year or last couple of years has paid off massively. But at the end of the day, I think that really only is going to happen in a situation like what we're in right now, where inflation is very high and or has been very high, and the prices are going to be increasing, and therefore the share price will appreciate um, because of all that extra money that is going into the company because of the fact that everything is more expensive. So
Yeah, I mean, it's a flight to safety, in my opinion, right? So, like, when people, when investors are kind of hesitant and wary of potentially a recession coming, which right now a lot of people are, then they're going to be more motivated to buy essential needs stocks like Loblaws, which people will still go to Loblaws. People still have to eat, even if there's a recession, right? So I think the fact that some people like to use the fact that the stock is at all-time highs to kind of justify their opinion that Loblaws is price gouging, but I really don't think that that's like a valid argument, because people, it's just, in my opinion, a flight to safety trade, and it's got nothing to do with price gouging. But yeah, agreed. Yeah, anyways, so that's it for that topic, and we've been going on for a long time. So do you guys have anything more to add for today's episode, or should we wrap it up here?
Oh, good.
No. Okay.
I'm
Don, why
good.
don't you take it away with the outro?
Okay, so I hope you guys enjoyed Zillennial Money podcast for today. I do miss that podcast, by the way. Graham, Andre, Jeremy, and I guess Kevin, bring it back. But nonetheless, please subscribe to our personal channel. Please go ahead and check out our clips channel as well. And we also do post shorts on that channel as well. And check out all of our personal channels. You definitely will enjoy that content too as well. So once again, leave a like, comment, and subscribe. And I guess peace out.
All right. Yeah, great show tonight. Thanks, guys.
Thanks, guys. Thanks for
Peace.
watching.